Hello everybody. Today we're going to talk about the risk-reward ratio and money management and how to use your stop loss and take profit in order to be successful in Forex market. So first thing we're going to look at is what type of an account you have and what is the risk-reward ratio. So risk-reward ratio is a formula used to measure the expected gains of a given investment against the risk of a loss. And obviously this is an example I have. If your account balance is 1,000, and what I recommend is always to risk maximum 2 or 3% of your capital per trade. So for each trade you risk only 2%, let's say. So 2% of 1,000 is $20. And so let's say you have your stop loss at 40 pips. In order to lose maximum $20, you need to use a 0.05 lot. And you should always calculate these things, like what you have to risk maximum per trade and what lot you need to use to risk maximum that amount. And after that, what I recommend to use is always a risk-reward ratio of minimum 1 to 2. So if you risk 1, your reward has to be of 2. And I will show you this concept in the charts later. So for example, for USD/JPY, if we enter a short position, and we are in a short position right now, and let's say we will put our stop loss at 112.20, and we will put the stop loss at this point because it is above the resistance area, which means that if the price breaks this area, then we will turn in a bullish momentum and our trade will become invalid. So we can put our stop loss above it, and in this case we will lose 20 pips from 112 to 112.20. And so our risk reward, so let's say our risk is 20, our reward needs to be at least 40 pips if it is 1 to 2. If we have a risk-reward ratio of 1 to 3, we can put 60 pips. So for example, to 111.40. So in this case, our risk-reward ratio will be 1 to 3. And it is crucial in the Forex market to use a good ratio because it leads you to be successful, and I will explain why right now. So for example, if our stop loss is always 40 pips and therefore our take profit is 80 pips if we are using a 1 to 2 risk reward ratio, we can lose 5 trades and we can win 3 trades, and we will be still in profit for the week. So let's say today is Tuesday and I lose 5 trades, and by Friday I win 3 trades. I will end the week with $20 in profit. Even though my win rate is very bad, is only 37.5%, I still make profit. And that's why your win rate is relevant only when you use a good ratio. And I will show you for each ratio what your win rate needs to be. So for example, if your ratio is 1 to 1, obviously you need to have a win rate of at least 50%. If it is 1 to 2, it's 33%. And if the ratio is 1 to 3, your win rate needs to be 25%. So even if your losing trades are more than your winning trades, If your ratio is very good, then you will still be in profit and at the end of the week. And this is very important to understand in the Forex market. And the reason why you need to wait until your trade goes to take profit or your trade goes to stop loss and don't close it before. What you can do is to close half of your lot and move stop loss to the entry point, just in case you want to protect your capital and you want to protect your money. And this is a really good thing to do, to bring your stop loss to the entry point. But other than that, you should leave the other half lot run to your take profit and don't close before, because if you close before, your reward ratio, your risk to reward ratio will change, and therefore you could not be as successful as you will be if you wait. And as you know, the Forex market needs a lot of patience, and I will show you another example right now of a good risk reward ratio. So, for example, in NZD USD, I will show you an example from last week of a trade I personally entered, and I also posted the analysis on the group. So it was a long from this point right here, and I will tell you how I placed the stop loss and take profit and how my risk reward was. 1 second. So in this case, we were at a support area. I waited for the price to go to support. I saw this 4-hour candle close with a hammer. See this one right here, and there was a signal of price action that we could enter a trade. If you wanted to be more sure, you could wait the second 2-hour candle and enter right here, but that's your choice. And obviously it changes your stop loss, because if you enter at this point, your stop loss needs to go below the support area, and therefore it will be let's see, of 30 pips. And if you enter at this point, your stop loss will be closer and only of 20 pips. So it is a personal choice, and it depends on how you decide to trade, if you wait for confirmation or if you enter before that. So we have a 20 pips stop loss in this case if we enter right here. And to have a risk reward ratio of 1 to 2, we will need a 40 pips take profit. So in this case, from 0.6722 to 0.6762. So right here. And as you see, we went to take profit right after, like in 10 hours maybe, in 12 hours, we went to take profit without any drawdown. And so if you want to have a risk reward of 1 to 3, then it will be a take profit of 60 pips, and in this case to 0.6782. Obviously, if your take profit is bigger, you need to have more patience. More patient. You have to be more patient. And in this case, we touched the take profit because it was 60 pips. But as I said, if your take profit is bigger, then we will still be waiting for the price to touch the take profit. So it depends on how you trade, how big is your stop loss, and what risk reward ratio you want to use.